Hi there, you're watching the weekly edition of Your Trades on ET Now. This is Priyanka Uppal along with me, Snehi. Snehi, this week was more of a recovery play, especially the kind of, the confidence booster we got after BJP win. Back-to-back two negative series, what we have seen on Nifty. Though banks did not do that bad in this whole week, but then the broad range, if you see for Nifty whole week, was very tight range. We've seen, if you sum it up for the whole week, it was a lackluster as well as a sideways trade, what you'll call it, if you sum it up the 5 ways. 250 points in total for Nifty. Bank Nifty did saw a 600 point of range, but banks were the real stellar move came in from banks, especially the PSU side of the bank. Standout gainers, if you talk about today, was of course some of the pharma names: Bharti Airtel, ICICI Bank, Reliance, DBs, and a couple of mid-cap and small-cap names, especially from the pharma names. But then overall, if you talk about the entire week, the big gainers were from PSU Bank, Energy Pack, media counters gaining in. And then, of course, Adani stocks. Let's talk about that. How can one forget the back-to-back, the confidence booster that is coming in from, firstly, from the GQG, then Abu Dhabi-based IHC, and now the Japanese bank, who've backed in banks like Mizuho, Sumitomo, talking on maintaining support for the Adani stocks. That's what we saw, the stocks rallying this whole week. In fact, recovering this whole week and giving up, in fact, positive gains only this week. Pharma stocks were trading in deep green in color this week, especially stocks like Peramil Pharma. Other than that, what we saw on DB's lab, of course, on the back of the City note today. So more or less, I think it was a sideways move. We saw recovery. Gains were offset. It was majorly the globally driven, and then we are back to, I think, where we started from, more or less, on Nifty.
Absolutely, Priyanka. Last Friday I said this, I'm going to say it again, all's well that ends. You know what happens? It just so happens to be that every week we're seeing some volatility when it comes to the markets, and Friday turns out to be good. This week it's been a good day for Monday, Wednesday, Friday. Tuesday, Thursday has been lackluster, but well, nonetheless, it's been a 1%, almost a 1% jump coming in on Nifty on a week-to-date basis. But let's take a look at some other top news of the week. NSE has introduced F&O contracts for 45 new stocks. They've also revised the price band of a lot of stocks to 10%, so that was the big news. Then you have HDFC Bank that was in focus because the market cap has surpassed 14 lakh crore, so that one was quite a buzz in trade over the course of the week. Then stocks like Zomato, Honasa, M&M, Z Entertainment, Ola were in focus. Zomato on the back of the QIP and the Jeffries note, Honasa on the back of that, their stock touching a 10% upper circuit just yesterday. You had M&M on the back of a new launch, multiple new launches rather, and Ola also on the back of their new launches. Z Entertainment on the back of the news flow that they have not re-elected or reappointed rather Puneet Goenka on the board again. Government has given nod to the guarantee waiver for telecom players, so the likes of Bharti Airtel, Vodafone were in focus and quite a buzz. And well, auto sales numbers is just around the corner now. It's that time of the new month where we talk about auto sales, and let's see what to expect from these numbers this time around. But rather than that, let's keep the discussion going about what the week shaped up to be, and for that we have Rajesh Palvia, Head Technical and Derivative Research at Axis Securities, joining us along with Ashi Anand, founder and CEO of IME Capital. Gentlemen, thanks so much for taking the time out and joining us at ET Now. Rajesh, I'm going to come to you first. Alternate day of gains and alternate day of losses is what we've seen over the course of the week. Tell us, which of the two do you think is a one-off? Do you think the gains that we've seen are just a lucky one-off that we've seen, and the consolidation that we've been seeing for quite some time now, do you think more to that rally is left? Does the consolidation have more legs, or do you believe that now it's all going to be good for the markets and the bad days are behind us and now only positive moves coming in?
Good afternoon, Snake. Good afternoon, everyone. So, looking at the recovery last couple of days, again, it's a very first day for the December series, and the rollover was on the slightly higher side, but series on series, it's a negative close. So, short build-up was there in the data for Nifty. But looking at the recovery, the kind of recovery which we have witnessed in the very first day of series, I think if we able to hold out 24,000 level for next couple of trading session, I think yes, there could be furthermore buying action we can see in the market, and possible Nifty may attempt to cross or to negotiate with the earlier resistance area of 24,350 to 24,400. That's the challenging level as of now for the Nifty. If at all Nifty crosses 24,400, then yes, confidence will back on the street, and then again fresh buying action we may witness in the market, and possible rally can extend to 24, 600, 700 zone also. But for near-term perspective, it's going to remain in the range only. The range where we are seeing for the Nifty based on the call put concentration, that is 23,900 on the downside and 24,400 on the high side. This could be the possible range for next couple of week. Either side breakout will decide the major direction for the market from here onward. Even for the bank nifty also, we have just able to close above 52,000 level for bank nifty. But still, if we look at the data, the bank nifty is still struggling to cross 52,200, 300 zone. That's the major supply zone as of now for near-term perspective. If at all bank nifty crosses 52,300, then there would be some short covering action we could witness, and then rally can extend to 52,600 to 52,800 kind of level. On the downside, the major support for the series for near-term perspective is placed at 51,800. So till Bank Nifty is holding 51,800, bias is likely to remain on the bullish side, and a minor dip should be used as a buying opportunity at this juncture, as some of the large cap banks are trying to give breakout. Stock like ICICI Bank, HDFC Bank, or SBI, these stocks are on our focus. So I think here also there is a possibility that Bank Nifty may attempt to give breakout on the higher side. So buy on dips is the strategy for Bank Nifty also.
Okay, Bank Nifty buy on dips is a strategy, and banks have been the clear outperformers also. If you look at the series gone by, the November series. Rajesh will come to you for next question, but we have Ashi also joining the show. Ashi, help us understand, the kind of trend that we have seen out of all the sectors and the spaces, especially after the earnings. NBFC space is a clear trend that the stress is visible, and the stocks which have less exposure to MFI space, they have been doing relatively better, and the spaces, or maybe the stocks, especially like Pyramid Enterprise, who've shifted their strategy from retail to wholesale, and the kind of exposure is more towards stressed sides. Those stocks have actually felt the heat. Is this going to trend last for some more time?
So, first of all, thanks for having me on the show. So, what we are very clearly seeing, and I think in NBFC is and overall in the financial space, after a couple of kind of 2, 3, 4 years of very kind of strong asset quality across different segments, you are clearly starting to see certain pockets of strain. Now, the good part is this is fairly kind of isolated to a few specific segments. Microfinance is clearly one of them, and I think just microfinance and the markets are starting to understand this. um, every few years there's some kind of problem, and you kind of see problems and clear large asset quality problems emerge. And it is important to really value and account for this when you are building your longer term models. So anything microfinance, I think markets are staying away from. But the other clear area is unsecured consumer loans. I think you've had for a certain period strong runaway growth. Certain pockets are clearly under stress. Now, the good part is most of the larger banks and the larger NBFCs, while they do have unsecured lending, these are much smaller parts of the overall pie, and which is where the issue is largely addressable. In fact, to a large extent, I think banks and quality NBFCs are one of the kind of spaces of the market that we find most interesting at the current point in time.
So that view coming in, Rajesh, I'm going to come back to you. I want to get your sense on the kind of moves that we've seen on the index and compare it with the ones that we've seen for the broader markets. So take a look at Nifty week to date move. It's been almost a 1% move, but Nifty mid cap is up 2.5%, and Nifty small cap, it's had a field day, if you could call it that, over the course of the week, of 5% uptick coming in just on a weekly basis. Do you think there is more security and more confidence now of the investors that lies in the broader market, or would you continue to believe that large caps would be a safer bet going ahead?
So clearly, if we analyze the last couple of days behavior of the market, the broader market was showing good, buying interest, and we have seen the same kind of recovery in Nifty mid cap as well as in the small cap space. So I think as a benchmark index, Nifty is still stuck in the range, but if you analyze the broader market, that is showing a different picture, and the way most of the mid cap, small cap stocks have moved up we believe that if he continues to hold about 24,000 kind of level for Nifty, so I think Nifty mid cap and small cap universe is likely to outperform, and maybe we could see stock specific action, and some of the sectors like today, if we analyze today's session, so chemical stocks, as well as the like fertilizer stocks, sugar stocks, all these stocks, even the recovery has been witnessed in some of the railway defense kind of stocks. So I think stock specific and sector specific momentum is going on, but Nifty may remain in consolidation, but the mid cap and small cap space can outperform in the coming weeks also.
Can outperform, and in fact, Rajesh, a very quick follow-up question to this only. I'll come back to you after this break. I have my question on the December seasonality also, which also indicates what you were talking. But after this break, we'll come back soon. Welcome back. You're watching the weekly edition of Your Trades on ET Now, and we have Rajesh Palwe and Ashi Anand to talk us about the week gone by and the week coming ahead. What lies for investors and traders now? Coming back to you, Rajesh, since you spoke about that, you could find that there are indications that small and mid cap means the broader market could perform better relatively to large cap in this coming week also. And you look at the trend, which December seasonality indicates that over last 10 years, small cap has been the outperformer. This index has given the average return of 3%. Do you think, though the seasonality factor, if you look at October and November, it did not play out, how much high hope should we have from broader markets here?
Even on a seasonality perspective, I think Nifty is also, on the bullish side for the December month. If we analyze for last 10 to 20 years, so most of the times we generally see that, Nifty has delivered a positive return. And we have already witnessed a correction of almost 10% for Nifty in last couple of months. So I think the broader market has already corrected, and some recovery and relief really is already playing out in the market, as Nifty is comfortably holding above 24,000 level, and Bank Nifty is able to hold above its near-term moving averages. So I think some buying interest and some confidence is again coming back on the street, and I think yes, Nifty mid cap as well as small cap may outperform for December month, as well as December series is also looks to be close on the positive side. So I think we may register some positive gain for the December series. So we are keeping our bullish view at this moment till Nifty is holding about 23,800, 900 zone. I think there is a possibility that Nifty may give attempt to give breakout about 24,400 also, and we may see a positive close for the December also.
Rajesh, fingers crossed all across, because we are also hoping for a positive December, especially after how October has been for the street. Actually, coming to you now, there's an anomaly that I've spotted, at least for the IT counter, because month to date, IT is the biggest sectoral gainer. Week to date, IT is the biggest sectoral loser. Help me understand why so much volatility when it comes to the IT pack. Of course, I know that this has a lot to do with the entire the Trump election happening, and you have a lot of outward-facing IT companies as well in India. But tell us, going ahead, should one A be invested in IT or not at all, given the volatility that we are seeing coming in from overseas? And secondly, if yes, then how would you play this space? Would you have your typical, the blue chip IT companies in your portfolio, or now time to give a look at the mid cap IT names as well?
Sure. So probably what you've seen over the last month, last week, won't really commit too much on that. That's just shorter term stuff which is playing out. And I think that the recent correction would be Trump related. But I think if you're looking at IT, there are a few important things to understand. If you look at IT stocks from an overall market context, they're probably the one part of the market, there are only a few parts of the market where valuations are still reasonably attractive. It's probably the banks, IT, pharma. These are some of the pockets where valuations haven't really run up too aggressively. IT as a pack hasn't really done too well, and this is understandable given the fact that the global economy has been weak. Discretionary demand has also been weak. Now, as we go into a rate cut cycle overseas, and also it's still very early days in the Trump presidency, but if Trump does manage to help turn the US economy around, you probably have very high quality companies that are trading at reasonably attractive valuations and ultimately are very globally cost and quality competitive. So it is a space which is definitely interesting from a longer term perspective, but in order to see a more sustained move, you clearly do need to see a US economic recovery and business confidence to for IT spends to increase in the US, that coming through. Between kind of, I think, large cap and mid cap firms, I think when it comes to pure IT services, we find valuations a little more comfortable in pure large caps. However, there are some very interesting companies when it comes to engineering ER&D services. And that is a space where I think the whole offshoring momentum is still it's a lot more nascent than where we are. IT services has actually matured. Growth rates are kind of low teens at best, but ER&D is a space that can outperform sustainably over a longer period. So if we are looking at kind of mid-cap IT companies, we tend to kind of prefer looking at ER&D companies as compared to plain vanilla IT services.
All right, that's a view coming on the IT pack. Absolutely. Quickly coming to Rajesh now. Rajesh, help us understand some of your recommendations for our viewers for coming week.
So Priyanka, three stocks idea where I am focusing. Bata India is first stock. Strong recovery in the stock in last couple of days. Stock comfortably holding about to 20-day, 50-day moving average. Long built up is there in today's derivative data. We believe that in Bata India can extend its gain. 1480 is the target where we are focusing for the stock. Keep your stop loss around 1375. The second stock is from a pharma space, that is Laurus Lab. A clear outperformance in this stock. The way stock is moving in height of higher bottom formation, and the way stock is bullish across all time frame. I think here we could see furthermore run up. Very strong buying action in last couple of week. We believe that Laurus Lab can extend its gain. 600 is the next target where we are focusing. One can buy with stop loss of 555. And the third stock is GNFC. This is the sixth consecutive day where stock is making a higher high-low formation. So that clearly shows sustained buying action is taking place in this stock. Most of the fertilizer and chemical stocks have done well in today's session. So GNFC can be looked at to buy. 665 is the near-term target. One can buy with stop loss of 620.
So retail, diagnostics as well as chemicals. So those are the picks coming in from that front, Rajesh. But on that note, Rajesh and Ashi, thanks so much for joining us. We'll have to let you go because it's a wrap on this edition of Your Trades. And Priyanka, lots to watch out for next week because
Absolutely.
RBI rate decision.
GDP data which has to come.
GDP data, well, yes, but RBI rate decision exactly next Friday. It's going to be a busy week for us. We're going to gear up for that over the weekend. We wish you a good weekend and we'll see you on Monday.